Imagine walking into a building carrying everything you've ever earned: gold, silver, grain, family treasures. You hand it to a priest. He locks it inside a stone room and gives you a tiny clay receipt. Congratulations! You've just used the world's first bank. And this happened nearly 5,000 years ago. Today, we're traveling back to ancient Mesopotamia to uncover the surprising origins of banking. Because banks didn't begin with businessmen in expensive suits. They began with temples. And the first bankers weren't wearing ties. They were wearing robes. Around 3000 BC, cities were growing rapidly. Farmers harvested grain. Merchants traded copper. Craftsmen produced valuable tools. People were finally accumulating wealth. But there was one major problem. Where do you keep it? There were no safes, no vaults, no police. Keeping your valuables at home was practically an invitation for thieves. People needed somewhere secure. The safest buildings in ancient cities weren't government offices, they were temples. Nobody wanted to steal from the gods. Temples had thick stone walls, permanent guards, and the trust of the entire community. So people began depositing valuables inside: gold, silver, jewelry, even sacks of grain. The temple recorded every deposit on clay tablets. Those tablets became proof of ownership. Thousands of years before paper receipts, people already had bank statements. Eventually, the temple priests noticed something interesting. Very few people came back to collect everything they stored. Most deposits simply sat there. Sound familiar? Modern banks noticed exactly the same thing. If only a small percentage of customers withdraw their money each day, why let the rest sit idle? So the temples began lending stored wealth to merchants and farmers. Borrowers paid interest. Depositors enjoyed safe storage. The temples earned profits. Banking had officially been invented. Loans transformed ancient society. Farmers borrowed seed before harvest. Merchants financed long-distance trade. Builders constructed larger cities. Instead of waiting years to accumulate enough wealth, people could invest immediately. One simple financial innovation accelerated entire civilizations. Without lending, economic growth would have been dramatically slower. Fast forward to today, your bank works almost exactly the same way. You deposit money. The bank records your balance digitally instead of on clay tablets. Most of your money isn't sitting inside a vault. It's being loaned to homeowners, businesses, entrepreneurs, credit card users. The technology changed. The core idea didn't. Here's the fascinating part. The world's first banks weren't built because people wanted to make money. They were built because people wanted to protect it. Security came first. Growth came second. And that lesson still matters today. Before worrying about investing, before chasing the highest returns, protect what you've already earned. Because every financial empire begins with one simple question: where can I safely keep my wealth? The ancient bankers answered that question nearly 5,000 years ago, and the rest is financial history.